Hello traders, good morning, this is Yanis. Thank you for joining me for that new outlook for upcoming trading week starting Monday, March the 13th. Before getting to our personal outlook, let's have a quick overview of what happened last week, starting with the euro. We are going to have a look at all the currency pairs that we are analyzing one after another, just having a quick recap and then the forecast for upcoming weeks. So without any further delays, let's have a look at the euro. As you can see here, we said last week, this is exactly my screen where we left the last presentation. We said that the personal bias for the euro was short, and we wanted to wait for a retracement in the 110.50, 111 area before committing to a short. And from there we said that we were aiming at a target around 109 and then 108. And as you can see here, the vertical green lines are the separators, so the week starts immediately after. In that instance of the euro, we did find that retracement almost to the point where we wanted it to be found in the 110.50, 111 area. Okay, 111 is here. And then we had that rejection, that green topping tail bar, that green bearish pin bar, which basically should have marked your entry on the next opening of the candle. And then the first target at 109 obviously was met or almost met. Okay, so we were spot on, actually almost to the pip for that pair. Now let's have a look at that new trading week bias. Obviously things haven't changed. Okay, we are still maintaining our euro weakness bias, so we are favoring the euro dollar pair short. Let's have a quick overview on the higher time frames on the weekly. As you can see, the pair is in a down move, very pronounced, very important. We had that very weird candle for the closing week, which is obviously a bearish candle. The bulls try to regain control up to that area around 111.20. They failed, and then it seems now that the bears are in control again and will manage to push through that ascending trend line, which right now serves as a support, but I'm expecting it to break and then to be used as a resistance to the upside before the pair continues towards 107.80, the previous lows, and for me around 106, which is my next target. So we maintain a very bearish bias for the euro. The daily is also showing us the same things. We did have that retest of that previous support here, which was broken and then served as a resistance, and price seems to be willing to continue south. So first immediate target, very short, very close, 107.80, but the real target is around 106. There shouldn't be anything in between that would stop that fall to those levels. Dropping to our trading time frame, the 4-hour, the suggestion is either to enter immediately, but you will need to be careful about that that ascending trend line that we saw from the weekly and the daily time frame. Okay, we may have a reaction here. You can wait for the break of the previous lows eventually, or you can enter. As long as we are moving below the 20 moving average, which I don't expect it to be retested, at least not at the beginning of the week. We can say that the shorts are obviously still in play. For me, the shorts would be off the table if we manage to have a close somewhere here around 111.50, 111.60. Okay, but even then the bias for the pair would remain short, so I would suggest you just sell the rallies if you find them. Okay, so the bias for the euro dollar on that new trading week remains extremely bearish. Now let's move to the pound dollar. We had the same outlook for last week, from the week before that, and we were looking to short the pound dollar. Again, we wanted to wait for a retracement around the 133, 134 area. Unfortunately, that retracement didn't happen. We did have a retracement to the 20 almost, but that was a shallow retracement before the pair finally hits the target around 130, 130, 150, okay, which is somewhere here. But again, we were hoping to get into that short much higher, so the targets obviously were off here. Although you know how we do trade, and we move from one support or one resistance area, in that case for that short, to the next support on the downside, and we are waiting to see if that support holds or not. So if you were in that trade, personally I wasn't, I missed it completely, to tell you the truth. You still should have been positive. The retracement did happen, but it was a shallow retracement against the much deeper one that I was personally expecting to find. Here again, the pair outlook remains extremely bearish. I don't see any kind of reaction moving up to the weekly time frame. To have a very quick overview of the weekly, we see that, and that's extremely important, we see that the pair is breaking the 200 moving average on the weekly. That's a huge milestone. Allow me to remove those comments for the moment. That's a huge milestone, and right now it's hanging, let's say, just barely at 130 something, waiting for that support either to hold or to break, but I'm looking at probably a break of that level, and I'm expecting the pound to hit 127 or close to 127, 128. These are my targets for upcoming week. So the outlook remains bearish. Let's have a look on the daily time frame. Here on the daily, the same thing. We broke that support, it became resistance, it was retested, and then we moved to the next target, to the downside. So from our trading time frame, the 4-hour time frame, we are looking at the same bearish scenario to repeat. We are just below the 20 moving average, and we are expecting that pair to move forward to the 127. Your stop loss should be, if you can afford them, I would place them above the 200 moving average on the 4-hour time frame. If you cannot support that big of a stop loss, then obviously you should place it somewhere above that purple area and above the previous highs created here, somewhere in 132.60 something. Okay, and then your target would be 127, which gives you a good risk to reward ratio. Let's say that we are entering here. In that case, our stop loss, or your stop loss, should be there, and your target, the expected target, is somewhere here. That gives you the idea of what we are looking for I'm going to place it just on the last candle. That should be your trade, that should be your entry, your stop loss, and finally your target for upcoming trading week. Moving on to the dollar Swiss pair. My personal bias was short, and I left it on purpose. You know that we do not change our opinions. We are quite serious about what we are doing, and being wrong is also part of trading. So my personal bias was short, and just to remind you where we stand when I had that bias and I was in favor of a short dollar Swiss, we were somewhere here. So the previous week closed below the 20 moving average. Price failed to make a higher high, and I was kind of expecting the price to be able to push further down, which obviously didn't, as during the weekend and as the market opened, we had that breach of the 20 moving average to the upside, which was not a sign to enter short, obviously, at the beginning of the week. And then we had that very important push, a very shallow retracement, and then the pair took its way to the upside, finding a nice support on the 20 moving average, tested once, then tested a second time before breaking the previous highs. The pair managed to break them here one time, closing above, and then again closing towards the end of the week above the week's highs. Okay, so I was on the sidelines. I didn't participate at that move. I didn't trade it, the dollar Swiss. However, if those of you who were able to analyze correctly that uptrend and found that support here on the 20 moving average, you could have had a very nice entry either here or after that very bullish green candle, and then you would be obviously in the driver's seat towards a good profit. So for this new trading week, obviously after that move which negated all the highs and managed to close above the 0.93 level, okay, so the bias has changed. Right now we are looking at dollar strength overall, all across the board, but again I need to point out that it's related and extremely depending on how the war between Ukraine and Russia and the tensions between Europe, the United States and Russia will materialize. We are having news breaking up almost every hours. So you need to be extremely cautious, because just a single statement may change things and may change the outcome of the bias or the direction that the pairs are trading. So be careful. Okay, right now we are looking at a dollar strengthening all across the board, so that would help me enter long on the dollar Swiss as well. Should you enter here, I would be waiting for a small retracement, at least around the 0.93 level and that descending trend line here, or eventually even a retest of the 20 and a retest of that purple area before committing, waiting for a candlestick pattern, a bullish candlestick pattern to confirm my position, and in which case I will have my entry around 0.9320, let's say, and the immediate target obviously for the week would be 0.94, which is the next resistance area to the upside for the dollar Swiss. Moving now to the dollar yen. Okay, I had a personal bias long. I was expecting a retracement. This is where how the week closed. Okay, again, that retracement didn't happen. Everything was extremely shallow. It did negotiate something here on the 20 moving average at the beginning of the week, but then the bulls were in control and they managed to close above all those previous highs here, and that was for me the decisive point of entry since I couldn't find my more deeper retracement that I was looking for. So in any case, the direction was again extremely correct. And what I'm looking for upcoming week is the same. Again, it's a dollar pair. So if the strength in the dollar materializes all over the board, then we will see the dollar yen move higher. I don't really like that one-way ticket from 114.70 to 117.30. So I would expect definitely the dollar yen to get back down to the 116.60, 116.80 area, which at that time the moving average should also be somewhere in the neighborhood, and find its support there. So I will be waiting for that retracement here before committing again to a long position. And at that time, as you can see here, we don't have a very close target to the upside. And the reason is because, let's move to the weekly time frame. And as you can see, we are currently pretty much off the charts once we broke that that level here, because we have to get back quite a bit to find the next area. And actually the next area would be here. Okay, and that would be now dropping down to the daily time frame. That would be the entry, that would be the position that I would be looking for. And getting to the trading time frame, the 4-hour time frame, this is how things should play for me. I would be looking for a long entry somewhere here, and okay, and that would be my stop. Now the stop is a bit trickier because, as you can see, we don't have any kind of lower low established, so I would use my stop below the 116.50 level, and hoping that I will also be below the 20 moving average at that time. And obviously my target will be somewhere here around 118, give or take a few pips. Okay, so that's the play that I would like to see: a retracement down to my entry, a bullish candlestick pattern confirming that the longs will be in control, and I will trigger my long trade. My stop loss would be somewhere here. Moving up to the Aussie dollar. Okay, the Aussie dollar it went long, but just for during the weekend actually, or at the opening, everything crashed down. The long bias still remains for the Aussie dollar. Technically, the pair is still making higher highs and higher lows, so the structure technically remains in an uptrend. However, as I said, I'm expecting the dollar to strengthen across the board, and so that will have an impact as well on the Aussie dollar pair. So for upcoming trading week, before committing to the direction, and my direction will be short, but let's have a look at the weekly, just to always have our minds on the bigger picture. Okay, so on the weekly, we are maintaining a downtrend move, a downtrend structure, despite the fact that here the pair couldn't close below to confirm. And because it didn't close below, but it closed above the previous highs here on the weekly, that was the reason why I was favoring the bullish direction for last week. However, now looking down to the daily, what do we see? We saw that the pair couldn't handle the 200 moving average and couldn't handle that descending trend line on that triangle that was formed. And despite the fact that the structure here remained in an uptrend, creating higher highs and higher lows. However, now we see that the bulls are not really in control. They couldn't pierce through the 0.7380 level here. They did attempt, but then you saw that the bears took the control of the downtrend, closing below. Then there was that second attempt to break above, but it was not even reaching the previous highs, and with a very big and important statement with that daily bar, the bears are now obviously in control. Okay, so this is why for me, for upcoming trading week on the 4-hour or trading time frame, my bias right now is short, so that would be my trade. My entry would be here, my stop would be slightly above, and my target would be the previous purple area, somewhere here. These would be the levels that I would be looking for. And then obviously whatever we have drawn as major support and resistance levels from the previous weeks, from the previous days, still remain in play. So that would be my first target. And then I will have my eyes on that very important area should the downtrend continue around 0.70 for the Aussie dollar. Okay, moving on to the dollar CAD. The dollar CAD, the personal bias was long, and actually that's what happened till almost midweek. The pair managed to push higher. We had an extremely important candle here at the beginning of the week, and then a second one closing above. That should have been your entry, and by doing that we identified already the importance of the 2640, which is this area here. We saw that rebound, okay, and I was looking for the 28 area, which actually was reached, okay, and from that moment, despite the fact that the pair seemed to have some good momentum closing above, that candle closed above the previous high for the dollar CAD. However, the pair recessed and moved further lower towards the end of the week to find the needed support on the 200 moving average on the 4-hour time frame. So right now my bias still remains bullish. I don't have a clean structure because we did make a higher high, but we also made a lower low. So right now it can go sideways very easily. I would be looking for a long eventually with an entry slightly above towards the 128.50 area, but it doesn't give me too much room to move to the upside. And as the pair can also move to the downside as well, I will be willing to stay on the sidelines for that one. And the reason is because on one hand, we do have the dollar strengthening all over the board, as we saw on the other dollar pairs that we analyzed. But at the same time, because of the war and the oil climbing to new highs, and you know that Canada is oil-based, is an oil-based economy as well. So that's what creates in my mind that kind of imbalance and uncertainty for that pair. So I find it extremely risky right now to try and guess a direction. As I said, the pair is in an imbalance, and I will be willing to eventually to drop to lower time frames. If you want to trade that pair, then you can use whatever we are teaching you, whatever we are trying to make you understand and share our brains on how we see the market. You can apply that on any kind of time frame. So yeah, feel free to drop to lower time frames, to the hourly or to the 15 minutes, depending on how you trade. Okay, and you apply the same things. You do have the levels that we keep week after week. You have the 20 and the 200 moving average. You know how things work. So a quick analysis here, if I had to pick a direction, I would go short. And the reason why I would go short is because now the pair is trending below the 20 moving average. It tries to retest both moving averages, and that's a very important point, okay? And we need to wait and see what it will do here on the hourly. If the bulls manage to close above those highs, then you may start looking for longs on the hourly, okay? But I would prefer, or let's say I'm thinking that we are going to have a reaction here, and that reaction will be to the downside. So I would be also waiting to see if I can see or find a bearish engulfing candle to the downside, closing below that previous candle here. Okay, and then I would aim for my short. You have your target, you have your stop loss here. So one case scenario, if you would like to go long, would be an entry somewhere here. You can use a stop below the previous lows. Okay, find a close above those highs and then enter, and your immediate target can be the previous highs here. That's one scenario. The other scenario could be a short trade. If you do have a rebound here, then your entry would be in the whereabouts of 127.40. You place your stop above those highs here, and your target should be the 126.50, 126.40 area, again giving you a good risk to reward ratio on the downside. So you can wait and see how price will work with that confluence of the two moving averages that we are using, the 20 and the 200, and then after that price have shown you what it intends to do, you can take your entry accordingly on the dollar CAD. Again, for me, I'd rather stay on the sidelines unless I see some interesting movement, or unless something else happens with the fundamentals, in which case I will have my eyes on that pair as well. And last but not least, moving on to the gold. Obviously, the bias for gold was long. Again, I said that could be a tricky entry because it could take off at the opening of the market, which is here. But you see, it didn't actually take off immediately. We can see that better on the hourly. I was waiting for a deeper retracement again around the 1920 area, which is somewhere here. But it didn't went that far, obviously. Actually, from our trading time frame, it didn't go anywhere. Okay, it started the week sideways. It dropped down to the previous, almost to the previous support area, which served as a support, 1961. But I was kind of hoping to see a much deeper retracement. Because we are trading also intra-week, but we are trading swings mostly. We are not trading intraday that much. So we want to see our positions, on a longer time frame. But even so, the price took off immediately. We said that depending on where you would find your entries, your stop loss and take profit would be accordingly. So if you did enter here, waited for that retracement, so that that pin bar here, that one, and then entered, then obviously your stop loss would have been below that area and your first target somewhere here. In any case, you should have been able to hit your targets without any real danger on that one. So getting the bigger picture now on the weekly for gold, what do we see? We see a clear rejection of the 2080 levels, which are where the previous highs. and that created that very nasty pin bar, that topping tail to the downside for the new trading week to come. So I'm kind of expecting now to see that deeper retracement that I was eventually looking for the previous week. Allow me to remove that, and basically I will short the pair, and I will short it at least to the 1870 level. I would love it to see further below, but that will be somewhere around the 20 moving average on the weekly time frame, which is an important moving average. And if we drop down to the daily time frame, we will see that this is the area, the 1900 area, and then obviously the 1800 area, where I'm kind of expecting things to rebound. However, as you can see, we do see some bottoming tails, some pin bars to the upside on the daily, and that makes me a bit cautious for my downtrend as well. Sorry, allow me to remove that one. And if you drop down now to the trading time frame, you see that we did have that small reaction. However, here we are starting making lower highs compared to that previous one here, and we are also making a lower low on the trading time frame compared to the previous lows. So despite that reaction here at the end of the trading week, I'm kind of expecting price and gold to respect the 20 moving average, and also to respect the 2010 area, and rebound from those levels to the downside. So for me, the trade that I will be looking for that new trading week would be an entry somewhere here. That will depend on price action, on how I will see price behaving. My stop, unfortunately, will be high. That's already what I have planned. It will be above the 20 something area. Obviously, if you want to have something more manageable, you can use the stop here around 2015, 2020. Okay, wait for the reaction here, or even a bit higher, and enter around the 1990 level with your first target. At least it should be in the 1900, 1920, 1900 level. I would go, that will be by the time price falls down here, that will be the time it will also find the resistance of the 200 moving average somewhere here, either midweek or so. Okay, if that downtrend materializes. But you need to be cautious. You need to be waiting for that retracement, either to the 20 or even higher, but you need to wait for that bearish engulfing pattern that I'm always looking for the shorts. Okay, otherwise you may see price pushing higher and higher, and again, that will depend on how things will move on between Ukraine and Russia, and how the fundamentals will move on during that weekend before the market opens. So nobody really knows how things will move, and this is why you need to be cautious and wait for price to show you what it really intends to do. Okay, so for the week to come, I'm bearish on gold, hoping to materialize the scenarios that I explained to you. Overall, my overall bias, my longer-term bias for gold remains bullish, obviously, but right now we are not seeing those deep retracements or even medium retracements that I'm always looking for. We are looking at shallow retracements, which means that the powers to reverse a direction are not quite important and do not have that power yet. and this is why we see continuation of the moves either to the upside or to the downside, like the euro and the pound, and this is why we are also expecting those moves to continue, at least for the moment. Okay, so be careful, always wait for confirmation, always wait, never rush, never be afraid to miss the train. Like I've said many times, and I will repeat many times again, the market is always here, it will be here, day in, day out. You don't need to try and climb on a train which is moving at a super fast speed, okay? Wait for it to lower its speed to be able to enter at the right price, buy or sell cheaper, and maximize your profits, while at the same time you're able to minimize your stop losses and have better targets. Okay, so do not rush, do not be afraid of missing the moves. If you miss them, then it's okay. You will find others, or you will find other pairs to trade. Never, never, ever chase your trades. Okay, let them come to you, let them come as you have planned them, and as always, trade your plan, plan your trades. Okay, I'm wishing you all an excellent weekend and an excellent upcoming trading week, and I hope to see you all next weekend for our new analysis. Thank you very much and take care.